And welcome once again to Investor's Edge. I'm Gary Kaltbaum, your host. Hey, thanks for being with us today. Glad you're here, ladies and gentlemen. Happy that you are listening. It's Halloween. It's 2025. It's Friday. Hope you're having a good day. As always, serious talk on everything that affects you. The markets, the economy, your job, your industry. My travel heck last night. Amongst other things today. And if you do not get this show in your city, we'll post it at GaryK.com. We'll also post it on our X feed. You don't follow us on X, you should. We'll post it on the YouTube channel, Biz TV. And if you'd like to email me, just be nice. No, really, just be nice. So, a few things. Number one, the government's still shut. Whatever's shut is still shut. Last night, I had a 7:30 flight out of Orlando, Florida, up to LaGuardia. And it came back to me that the flight would not be leaving till 11 and may not even go. So we searched and we got a different flight into Newark. That got canceled. Now, there was weather, but staffing problems. After that was canceled, I found out that the first one was canceled anyhow, so I didn't miss that one. So we kept searching, or I kept searching, and I found a 2 o'clock flight. This is about 4 o'clock. That was scheduled to leave at 7. 5 hours delay. So I said, okay, let's take the shot. We book it. Somehow we got 2 seats. Ran to the airport. Got to the airport. There was no shot of it leaving at 7. And then at the airport, Orlando, comes a note. Because of no air traffic controllers and supervisors taking over, that they will only allow 3 flights to land each hour. Which means, are they even going to land my incoming flight? Well, we lucked out. They landed my flight, scheduled to leave. We didn't leave till 10:30. A 2 o'clock flight was 8.5 hours late. We got on the plane, and then there was a stoppage in Newark because of weather. And then he comes on, the pilot, and says, well, we have an issue. The crew would be signing out that if we don't lift off soon enough, well, within minutes of them signing out and us going back to the gate, we lifted off. We got here. Got to sleep at 2 a.m. What's my point? These ass clowns in D.C. who have taken us to $38 trillion of debt, that lie, cheat, and steal, insider trade, become lobbyists after they leave D.C. or set up NGOs on climate and get government grants, our taxpayer dollars, for no reason. They can't come to a deal on reopening the government. So staffing of air traffic controllers that are not being paid is low. And in case you don't know, an air traffic controller has to be on their game. Do you know why? Duh. And I was on TV today from noon to 2, and I posed the question, are we just waiting for disaster or tragedy to happen? Do you think maybe they'd open up the government if a plane, God forbid, fell out of the sky because of an air traffic controller mistake or just not enough staff? I hate to sound morbid, but is this what going to make them move? People are not getting paid for the jobs they are doing. And I know, government this, government that, too many people. Well, they still have their jobs. And we have to remember, these are the same people that brought us to $38 trillion of debt. Republicans and the Marxist Party. So just letting you know what happened last night. When we landed at Newark, there was a Dallas flight that was supposed to leave at 8, scheduled to leave at 1:45 a.m. And in case you don't know, people fly into Newark and transit to Europe and other parts of the world through United. Big hub. Nobody got there on time. We've had a motto, they all suck. They've proven my motto once again. They really do all suck. And whether you love Trump or hate Trump, love the Democrats or hate them, they all suck. That's my little take to start the show. And I don't think many can disagree. Okay, we move on. We're going to do a little bit of description time here at Investor's Edge. We're going to do a little describing here at Investor's Edge. We're about to be very descriptive on what we are seeing here on Investor's Edge. And we are not going to make any prediction here, but we are, again, going to describe. So I want you to listen carefully. On the back end of the show, well, we'll tell you the Dow was up 40 today. The NASDAQ was up 300 and something early, finished up 140. Doesn't matter. Well, it does. Ladies and gentlemen, the NASDAQ closed today at 23,724. At the lows of the Trump tariff crash, the NASDAQ was 14,784. Before the Trump tariff crash, the high was around 20,110. So we dropped 5,200 points. At one time, the NASDAQ from the high was down 26% because of President Trump and his stupid tariffs, which of course they took off immediately because they like being in power. Now let me repeat something. The NASDAQ closed just below 24,000. At the lows, the NASDAQ, we're going to round it off, 14,800. You got me? The NASDAQ is up. Let's call it 9,000 points from the April lows. You got that? 9,000 points from the April lows. There were more new yearly lows on the NASDAQ than new yearly highs today. Now let me repeat. The NASDAQ was 14,784 at the lows. It's 23,724, yet there are 167 new yearly lows that are below the lows of April. Up next, what does that mean? This is the one and only Investor's Edge. And welcome once again to Investor's Edge. So imagine the NASDAQ is up 9,000 points from the lows, yet there are 167 new yearly lows. Worse than the lows of the NASDAQ. And what does that mean? Well, first off, you better not own any of those names. That's number one. Number two, it doesn't have to mean much, except that means the internals of the market are definitely not keeping up with the market. But you already knew that. You already knew that because we have been telling you how influential the few are on the NASDAQ. NASDAQ 100 also, 7 stocks are like 60% of the NASDAQ 100. And if they are doing well and everything else is not, the indices can still do fine. But it's what's underneath the surface. And in case you don't know, I have it in front of me right now. 8 stocks. Number 9's Palantir. They report Monday. 8 stocks. You ready for this? 25, 36, 43, 53, 57, 61, 65, 66, 67, 68 are now almost 70% of the NASDAQ 100. 92 stocks are 30% of the NASDAQ 100, and 8 stocks are 70%. That's stunning. So we know that the NASDAQ, the index, can't argue it, whatever the makeup is, but underneath the surface, it's something to ponder. But we're not done. Because on the S&P, now mind you, there's 500 names, and if it was equal weighting on the S&P, each stock would be worth 0.2%, right? Well, in the S&P, you ready? 8, 14, 20, 24, 25, 26, 27, 28, 29, 30, 32, 34, 35, 36, 5, 37, 3, 38. 8 stocks are almost 40% of the S&P 500. What? 492 stocks are 60%? And 8 stocks are 40? Do you know what that means? If the 492 stocks went down 10% each, but 8 stocks went up, let's say 12%, the index would be flat. And I'm rounding off. That's what we mean. Because today, there were more new yearly lows on the NYSE also. And the NYSE at the crash lows was 16,800. We closed at 21,400 today. Huh. So that's number one. New yearly lows? What? New yearly lows more than new yearly highs on the New York and the NASDAQ. And it doesn't matter which they are. The fact that they are is telling. That's number one, total. But number two is we're just off the highs in the NASDAQ. In fact, the high close was Wednesday at 24,019. We're 1% off the highs, and there were only 116 new yearly highs on the NASDAQ. Take out the non-operating companies, there are only 50. So we're just letting you know we're staying large cap, we're staying mega cap, we're staying tech. That's where the money's been flowing. We don't know whether it's going to continue, but I'm going to give you one big, gigantic, juicy, over-the-top statement. When, not if, because it'll happen again. We know that. It's just the laws of the market. When technology, semiconductors, artificial intelligence, data storage, and the like go into a bear market, and that money does not flow big time into that other rest of the market, look out below. When? 2 years from now? 6 months from now? It's not next week. I can promise you that. Too many are in good shape, and today was another day with amazing gaps to the upside on earnings reports. We're just letting you know the internals are not very good. We'll keep you abreast. We'll keep you informed. What would be the first big shot across the bow? When the indices break the 50-day moving average, which has not occurred since they turned up in April. A couple of teases 3 weeks ago on the other moronic Trump tariff threats, which they took off immediately. The S&P 50-day moving average is at 66.40. You're at 68.40, so you're 3% above. That's fine. The NASDAQ 50-day moving average down at 22,485. We're at 23,724. So you're about, 5% above? So plenty of room. Again, we'll keep informed. And we're not trying to throw cold water. We're just telling you facts. And we'll let you know. Up next, more on this. This is the one and only Investor's Edge. And welcome once again to Investor's Edge. So we'll be watching Tech Like a Hawk. And you had more gaps to the upside. Something like a Twilio that's been weak, up $22, 20% today. How about Cloudflare symbol net, up 14% today. Amazon was up 30 on the open, finished only up 21, but was still up 21. We'll see how it goes. Plenty of good action in technology still. Not complaining. We're just letting you know about the internals. Now, the next thing I have to bring up, as we stay a little bit morbid, we received a bunch of emails on this one thing. Does anybody know what the Hindenburg is? Well, the Hindenburg was one of those, like the Goodyear blimp that went up and caught on fire this many years ago. there is something in my industry called the Hindenburg omen. And I guess somebody published that yesterday or in the last week you had one or two of these Hindenburg omens in the market. You can go look it up. We're not going to spend any time describing it. It just has to do with what's happening in the market. And I guess what they're saying is every time, or most of the time, or 80% of the time, when these Hindenburg omens show up, the market's doomed for a while. And if there's a cluster of them, look out. We don't have to worry about these things. The market will decide. You can't hide tops in the market, bad markets, bear markets. And we're just letting you know as of now. Internals are not good. We have described for you many an area that are in their own private bear markets. We do know that's going on. But we don't want to get away from what is working. And as narrow as it is and as narrow as it's getting, terrific. We'll just keep that in our file manager and deal with it. We just want to let you know that I guess a lot of people are reading and watching, and somebody published this Hindenburg omen, whatever. And we're not saying it's going to do something or not. We're just stating we'll let the market decide and see how it goes. Next thing I want to bring up is Netflix. 10-for-1 stock split. The stock has been under distribution. It has not been acting well. Yet today was up $30. And the news was they announced a 10-for-1 stock split. It's $1,100 stock, and if it split today, it would be $110. But I think when somebody announces a split, it's usually weeks away. And they're doing it to make it more palatable for the average investor. And as I have said to you in the past, there is no way we would ever see a Booking Holdings at $5,000. Goldman Sachs is at $789. Normally, these companies would do splits. But splits have not been in fashion. The question is, will Netflix bring in or auger in more? I don't know. What I do know is be very careful about buying stocks that jump up because of a split announcement. Nothing changes hands. Valuation doesn't change. That will have, if you have 100 shares now, you'll have 1,000, but you will have to recognize that your stock will not be 1,100, it'll be 110, it'll be the same thing. And too often we have seen big splits, and it was the top of the market. You know what our favorite call was? Chipotle. Chipotle did the 50-for-1 split back in, I believe, June of 24, and we got on this show and said, I just want to let you know, we predict nothing, but 50-to-1 stock splits remind us of big tops in the past. June of 24. Stock's gone from 69 to 31. And why does that occur? Well, usually big splits happen after big moves in the stock. And the cycle tends to be over at that time. Not every time. We've seen Apple do a big split. We've seen Nvidia do a 10-for-1. Just keep it in your file manager. Next, Amazon. If I had a dime for every person asking if you'd buy the Amazon and the Gap today, I answered all of them. I'm not yet. That was my answer. And it opened up today, let's call it 260, close at 244. Let me make sure that's correct. I'm pretty sure I'm right. Yeah, it opened up right around, 250. No, that can't be right. Nah, that's not right. I saw it up $30 early. I could be wrong. Anyway, it got distributed a little bit today. And we'll wait and see if it sets up. Apple finished down. Remember, it was up big in the aftermarket yesterday. They raised their numbers. Well, they opened it up today at 277, closed at 270, and finished down. What does that tell you? I don't think it's anything bad. It just got to a place where not going higher just yet. Speaking of big names, Microsoft still under pressure, down another $9 today. And it's in a void of new money. And Meta, even worse, down another $18 today after gapping down big yesterday, breaking 6-month support. Meta's back to trading where it was last December. So that's two big names that we certainly avoid at this juncture. And that's already on top of SAP, Oracle, that broke the 50-day and cannot be considered until it gets back above, Salesforce.com, Adobe, Costco, all in bearish trends. Some of the big names that have major influence that we follow. So wanted to bring that up. And lastly, we wanted to bring up the Bitcoin. Because man, oh man, oh man, they be touting you. Ladies and gentlemen, wait till we tell you so. Bitcoin stock closed today. The stock that represents just a little bit above last November. 11 months of no gains, yet they're screaming and yelling and touting. 1 million, 5 million, 10 million. We'll let the market decide on that. Right now, it's an avoid on new money. And if the IBIT takes out the last 2 weeks, run for the hills. Same goes for Ethereum. Crypto. That will never ever go into a bear market again. At least that's what the tout artists want you to believe. And we just want you to remember the last bear market saw it drop 75%. And at the bottom of the bear market, the big investment banks were saying it was dog crap and don't go near it. And you know what they're saying now? Ooh, we should be adopting it. Just remember who these people are. They're like us average people. Fear and greed. Now they're greedy because of price. It's had a big move up over the last couple of years. I can promise you, if it has another 50% drop or more, they will turn tail again. And we're talking about the big machas at the big investment banks. Up next, who was I on TV with today for 2 hours? That's up next on Investor's Edge. And welcome once again to Investor's Edge. Thanks for being with us today. So, I am a privileged man. I get I am a Fox News Channel business contributor. Been there a long time. And I get to go on TV and give my opinions. I get to go on the Fox radio, give my opinions. Do you know I am now kind of sort of a regular, believe it or not, on the Fox Weather Channel? They're asking me on like once or 2 times a month to talk about not the weather, but the effect of weather financially. It's a privilege. It's an honor. Part of that are people you get to meet. I got to, on more than a few occasions, sit at the same table with Steve Forbes. I dig that. And of course, Neil Cavuto's no longer there. What an honor. Today, for the first time, I got to sit next to Kevin O'Leary from Shark Tank. And I have to tell you, I haven't watched every one of their shows, but I've watched it a decent amount of times. And it's a fantastic show because it really represents entrepreneurship, smarts, upward mobility, creativity. And I still remember, The Ring that did not get a deal and then got bought out by, I think, Amazon. The Ring doorbell, amongst others. Anyway, I met Kevin O'Leary for the first time, and I only know from the 2 hours I spent with him and a little bit before the show. But you try to think you can get a good feel of somebody. What a nice man. First off, he's brilliant. You just watch him on TV. He's brilliant. And he's involved in many businesses. And he's brilliant. But I'm a bigger believer in not brilliance, but nice people. Nice man. Engaging man. And you can tell. No fakery. And I've met some famous people that you can smell their fakery several miles away. I felt pretty cool today sitting next to him for 2 hours. And of course, my sons are texting me because they love Shark Tank and they love him. His nickname, Mr. Wonderful. And they text me, and I showed it to Kevin, invite him over for dinner. And he loved it. Anyway, just letting you know, I don't know if he's a billionaire or not, but down to earth. Just plain nice. No fakery. Very impressed with that. Besides his know-how of industry and business. Well done. I was very happy with myself today. I felt like, another notch. Another notch up for Gary. You never know who you're going to meet. Anyway, that's Kevin O'Leary of Shark Tank. And he's been on Fox a lot, but I saw him on CNN a couple of weeks ago. He's everywhere. And man, he knows his stuff. He knows his stuff. I think I'm smart. I'm a doofus. Anyway, just wanted to let you know that was fun today. Had a very good time. I mentioned earlier earnings. There continue to be on both sides gargantuan gaps on earnings, more than I've ever seen. I don't know why. I just know it is. And last quarter we had the same thing. And hardly any stocks really got going from that because they were gapped up too high. I'm anxious to see what happens this time. Something like symbol NET gapped up today and kept going today. Actually gapped up to 234, up $14. Rallied another $16, up 30. Huge move. And then I saw Amazon gap up, sell off. Apple gap up, sell off. So we'll keep you apprised. Market could have been a lot better. Dow up 40, NASDAQ up 143, and I can tell you, weirdly enough, the Dow dropped in the last 5 minutes 150 points. The NASDAQ dropped in the last 5 minutes I can figure it out. Yeah, it went from 23,820 to 23,724, almost 100 points. So a little rough close, but I'm going to call that not a biggie. For me, the biggie, the internals, and the almost one note of the market in the tech, artificial intelligence, semiconductor, data center names in this market. And I have to repeat, if and when they go into a bear market, if that money doesn't flow to these other areas that we have kept you on avoid, there's your good correction, if not more. But for today, mixed bag. But boy, oh boy, that technology. And I have to throw in the solar's acting pretty darn well too now. First Solar up $33 today, 14%. That all said, hey, travel safe. You have a great weekend. Drive carefully. When you get home, do like we do. Quite simple. Make sure you hug your family. Make sure you hug your children. They will feel better. You will feel better. I promise. Stay well. Be well. Thanks for joining. Good night, all. Bye-bye.